Bitcoin explodes to 50K as Chinese New Year kicks off a massive rally. ETF inflows outweigh supply as miners seem to be hoarding coins ahead of the halving. And crypto vol and skew spike as call buyers roll up their strikes and add more premium to the trade. All this and more in this week's Crypto Options Unplugged. Hey everyone, it's Imran from Options Insight, back with another Crypto Options Unplugged. And again, Dave in the studio with me from FRNT Financial. This market, Dave, seriously, it's not boring, is it?
It's not boring. No, welcome to crypto. and it always gets more exciting just when everyone thinks it's going to get boring as well.
That's right.
Which is kind of what we all love about it, right?
Keeps wrong footing everyone, right?
It does, and it's why from a pure like day trader point of view, certainly if you're messing around in spot, I think it's so difficult to day trade it because the volatility inherent is just really, really difficult to trade around, which is why I kind of always think if you're going to trade it, use options and trade, via options rather than trying
Trust me, being an options trader, you can get your head chopped off doing that as well.
You can. And I'll typically use options like more for hedges and kind of managing my risk around a core long position. But obviously I'm a kind of longer term trader investor, I guess, more so than a trader in that sense.
So last week we mentioned Chinese New Year. Historically, it's a very bullish pattern.
It was a great shout. It was a great
10x
shout.
research. Hat tip to you, indeed, my son. That was amazing, right?
Yeah, I mean, yeah, it was. We spoke about it literally a week ago, and then we had this kind of huge move over that time. I think there's a few things though going on as well. Like maybe there is that Chinese New Year effect. I think what was quite important last week, we've spoken a lot around China and the issues there. We actually saw the recent measures to stabilise the stock market take effect. And I've kind of suggested that stability in China is a prerequisite to Bitcoin moving higher from the point of view that China are battling these capital outflows and they're trying to maintain what I keep describing as this veil of stability. So they're kind of incentivized to keep a lid on Bitcoin to stop and to disencourage or disincentivize this capital outflow. So
they're not doing a great job of keeping a lid on it, though, are they?
Well, no, they haven't, and it's but last week, we saw Chinese stocks up 5%. So the measures they're having are starting to have an impact, and you kind of go, okay, maybe now there's less reason to be keeping a lid on Bitcoin. On top of all that, they're into Chinese New Year, so maybe that's kind of having an effect. But I do think that stability in China is quite important to watch from here as well. I think we start to see things flare up again in China. Don't be surprised if Bitcoin starts to underperform once again. But for now, so far, so good.
Yeah. And I think the big story, though, it does seem like the Chinese New Year effect had some impact, but the big story that we can really all see in the data is the ETF inflows.
Yeah.
So tell us a little bit about what those numbers are looking like now.
Yeah, again, we've been talking for a few weeks now about this kind of battle between the inflows into the nines and then the grayscale outflows, the FTX selling, from the locked up grayscale coins. We're now starting to see the grayscale selling sort of slow, like pretty much to a trickle, and we're starting to see the net inflows into the nines really start to accelerate. So I think into last week, we're now seeing like net inflows of around between 400 to 500 million into the ETF. So
in a week, right?
Yeah, well, these are daily inflows now we're seeing, right? So
daily inflows
of that much, yeah. So I think Thursday, Friday, I'm not sure what yesterday's were, but we're seeing now these huge inflows. Now, bear in mind, like supply, daily Bitcoin supply is around, I think it's like 900 Bitcoin. So call that like at these levels, like 45 million a day. So we're essentially got just through the ETF net demand we've essentially got 10x the demand for Bitcoin versus the daily supply of Bitcoin. Now,
that's huge.
it's huge, right? It's just, I mean, and this is I've been talking for a while about this demand shock from the ETFs and the potential capital sources that it unlocks and allows to come into the space. And it's just at this point, it's just pure maths in terms of that supply demand dynamic. So you've got this huge demand shock, positive demand shock into the space that at first was kind of mixed because it had these offsetting flows, but say those flows, the offsetting sell flows are now slowing to a trickle. Meanwhile, we've got this constant kind of flow into the ETFs. At the same time, we're about to move into a halving. So that 900 Bitcoin becomes 450 Bitcoin a day.
Yeah, so let's explain that a little bit. So for people who don't really understand how the halving works, what is the halving? Why does it matter so much to Bitcoin? Why is everyone getting excited about it?
Yeah, so the halving was just the supply schedule, if you like, for Bitcoin and the rewards to miners was pre-programmed, right? So what happens at the halving is the mining reward for mining a block and validating a block gets cut in half. So essentially what you're doing is in an instant, you're going to cut in half the supply, the daily supply of Bitcoin that we've got coming onto the market. So again, it's just, I mean, this is kind of the genius behind all of this, right? And why over time you're going to be constantly fighting this like deflationary asset that's going to constantly be seeing a slower and slower supply schedule come onto the market. Now, when you combine that with what has just been this big demand shock, it's just going to be a huge impact, and which is why I keep calling for, I think we comfortably see record highs this year, because I don't see what kind of flips that dynamic and where the big sell flows come in that would offset it. Now, obviously, we'll go through periods of where leverage gets built up and everyone gets over leveraged, and then we're going to get the washouts. And maybe we saw that when the ETFs launched. You had kind of short-term money coming in, everyone getting levered into the announcement. The announcement comes, then everyone gets squeezed out. Maybe a few guys go short, and then we have these big washouts. And you have to remember, again, we're 70, 80 volt asset class in crypto, the moves are going to be big. So like 20, 30% pullbacks are pretty normal, right?
I mean, it's done 20% in the last week.
Yeah. Right? And then, yeah. So,
yeah.
And again, we've discussed the beautiful thing about Bitcoin and the crypto space is that, the upside volatility is often sharper than the actual sort of downside volatility.
So something I also read, and again, a hat tip to 10x Research, is, and I think that the good thing about those guys is they analyze past trends, past data to try and identify patterns. And the thing that I found really interesting was that the miners who know their reward for mining is about to get cut in half, they start hoarding whatever coins they print into that halving. Because they know that there's a very high probability that the price of Bitcoin is going to skyrocket into the halving because everyone knows the supply is getting cut. Well, then they'd be crazy to like print their Bitcoin, to mine their Bitcoins, get their rewards every day, and then just smash them out into the market at the current price when there's a very high expectation that the price is going to be higher in a month or two. So the fact that they start hoarding means the supply is reduced even more than what's going to happen when the halving happens.
Yeah.
So this supply and demand shock that's happening at the same time is, really explains the parabolic price action that we're seeing, and why we often see that sort of pattern, and it's playing out in front of our very eyes, right?
Yeah, and I think if you compare to past like halving cycles and what have you, I do think that's where the ETF impact is huge, because it's just bringing in a whole new kind of pool of capital that couldn't access the space before. Like even if it wanted to, it was unable to. So now you've sort of given that. Yeah, I mean, I think it potentially is going to really, we've already had a huge move, but I still don't think this is the end of it. The only thing against it is I do think the macro at the moment is kind of blowing a bit of a headwind against it. So we're seeing yields come up. Just before we come in the studio, we had another kind of hot CPI print So we consistently, which is a little bit frustrating given my kind of view on the world, we're kind of having to price out these rate cuts, or at least push them out. Now, it doesn't change the overall dynamic because we're still talking about cuts. I mean, I think it would be far more problematic if we have to start pricing in hikes. For now, I just think there's a little bit of volatility in the data. And we're now probably, I'm guessing we're going to pricing out cuts now to being in June. So as we're pushing on that back, yields are going higher, dollars kind of strengthening. They're headwinds to Bitcoin and the broader crypto space.
They're not going to be headwinds if you keep seeing 500. Is it 500? Did you say million or billion?
In terms of
daily inflows.
500 million.
500 million daily inflows.
Yeah.
Yeah, if we keep saying that, if we keep seeing that, I mean, I don't think it really matters what the rates are doing so much, right?
And the other big thing that's kind of been on my mind since we spoke last week, because there's a lot of talk as well, like NASDAQ and the Magnificent Seven stocks just keep making ever new highs. And, what's kind of underlying that? And one of the things that's kind of been on my mind is I've been talking about US debt reaching this inflection point, and how unsustainable this dynamic is. And then we have Jay Powell going on 60 Minutes saying the same thing, that this is like long-term unsustainable, and kind of explaining what he means by that is the debt is the debt growth is outpacing economic growth. So then you kind of think about, what do you want to own, right, to essentially hedge against that and also outperform that. So you kind of want to own these kind of growth stocks that are going to outperform that, and that aren't kind of just being driven by this debt. So it feels like tech has become like this, what we call Tina trade, like there is no alternative.
But a very narrow part of tech though, right?
Yeah. And we're focused on these stocks that have this massive growth potential. And then you've got AI coming into it.
But I don't even think it's the growth potential. It's the ones that have pricing power.
Yeah.
Right. You could look at the ARK basket with all the innovation stocks that do all kinds of stuff like genomics or whatever the hell it is. They've got growth potential, but they've got no pricing power, right? Whereas stocks like the Mag 7 have got real pricing power. They've got products that people want and need.
Yeah.
Right. People's growth depends on those stocks. Nvidia is the darling of the stock market. Why? Because the only way anyone can grow their business is by using AI. And to use AI, they need Nvidia, right?
Yeah.
So it's that pricing power that makes the difference.
And we were talking, like, you hear Elon Musk saying, like, Tesla can't get enough of the product. Like there's not enough supply, so they're having to look for alternative sources, right? So again, there's kind of, in my mind, a bit of a Tina trade. And if you're thinking what is going to outpace the growth of debt, like it is going to be in the tech stocks, and it is going to be in crypto, and it's going to be in Bitcoin. So I think
you're sounding more and more like my friend Raoul Powell over at Real Vision. That's what his whole exponential age thesis is all about, right? Basically, there's two secular places of growth: crypto and tech, right?
Yeah, and they're just, and the world's becoming more digitized, right? Not less. And I mean, I've had this argument for years in like growth versus value. I'm like, why, the value stocks are also in the kind of industries that are kind of dying industries in my mind. Why would you not want to be exposed to the future and to this kind of tech revolution that's been going on for a while, but we seem to be accelerating within that as the world becomes more digital. And now crypto, I think people are understanding, is going to be an important part of that world as well. So you've got so many dynamics going on. I do think the US debt is a huge problem, and the irony is we spoke about covering like sort of both the tail risks, the left and right tail, in terms of Bitcoin being this kind of risk on, Fed are cutting rates, lots of liquidity coming in, NASDAQ's rallying, Bitcoin's rallying more. And then it's now taken on this kind of safe haven characteristic whereby, if yields start to explode higher because of this sort of stickiness of inflation, because of this resilience in the US data, then all of a sudden we become more and more worried about this US debt dynamic, and then we're looking for where's the safe havens outside of that. And I think Bitcoin increasingly is kind of capturing that sort of left tail, if you like, which might start to hit, by the way, it might start to hit stocks.
Yeah, this is where I think Bitcoin will decorrelate from stocks, because that's one of the, again, why are so many institutions wanting to get into Bitcoin, right? Because you look at the correlation to stocks, it's gone through periods of being highly correlated, but at the moment it's not that correlated. So if you can have an asset that will do well relative to stocks, if yields spike like what you're describing, then that gives you even more reason to put a slice of your portfolio into it, right?
Yeah, and I just think we were asked a lot about into the ETF launch around, is it priced? And I kind of had the view that we were priced for the headline, definitely, and then you had the classic buy the rumor, sell the news type impact, which you kind of expect. I now think we're now starting to really price the ETF effect. We had that short-term headline impact. Now it's trying to really price the actual flows and anticipating the flows. And as we're starting to see those come in, right, it's just such a huge idiosyncratic story for Bitcoin. And everyone was talking about this 35k level a couple of weeks ago. We're now up at 50k. We've all been there when you just kind of miss the move. And then I think people are still under position for it. They're forced to chase that performance. So, yeah, I think the market feels a little bit shell-shocked by the pace of this move. And I just see that continuing because I think there's just such a powerful demand-supply dynamic into the halving. I mean, we're not even spoken about ETH and like the potential ETFs there and all that. But there's a real positive story right now that I think is going to be really hard to fight. And I don't think people are positioned fully enough for it.
And speaking of the chase, why don't we have a little look what the options players were doing this week? Because some of those flows feel pretty chasey to me. Check this out. Okay, so jumping into realized vol this week, we did see a nice uptick. You can see troughing out last week in the low 30s on realized, kind of works its way back into the low 40s. Now, considering the size of the moves that we've had in Bitcoin over the last week, you would have thought realized would have spiked more. But as you can see, each daily move is just a consistent increase. So we had like 1% rally there, 3%, 2%, 4%, 1%. It's just a steady up move throughout the course of literally the entire week. That's why all of these are positive bars. And that's why realized vol hasn't actually gone into the 60s or 70s, even though you may have expected that. It's just been a very, very steady increase in realized, an increase in spot basically on Bitcoin. So extremely solid and consistent price action we are seeing. If we then have a look at the flows, you shouldn't be surprised to hear there's a lot of call buying going on in the flows. So we did initially start to see fast money buying February options. You can see that here on these purple bars, a lot of on-screen activity as well. These are the block trades, but on-screen activity in upside calls too. But then we started to see towards the end of last week some really big chunks going up. A big fund buying the likes of April, June, September, December, all these strikes concentrated in the 65 to 70k area. That stuff amounting to about $8.5 million of premium spent. There was some sales of in the money calls, the June 40k calls. This little red bar looks tiny here, but actually it's down here. Basically that sale funding some of the purchases. So it looks like maybe the fund is rolling up some calls into out of the monies to get more leverage to the premium. That's what we suspect went on there. Now, once Bitcoin reached its target level of around 50k for a lot of people looking for that as an area where we might meet some resistance, we did start to see flows come through on Ethereum as well. The Ethereum flows, you can see here, jumping across, similar story, a lot of covering going on in February upside. We had said there'd been a lot of call overwriting going on, but if we broke above 2,500, that was all going to come back as buyers. And a lot of these blue bars are February options, the purple as well, that's people covering short gamma. We also saw a chunk of March buying, that's these blue bars down here. And the red bars are just April calls that were being sold to finance some of that. So people are still trying to get leverage to a move in Ethereum. Ethereum has started to outperform in the last couple of days, and you know, starting to show signs that maybe that's going to have its little charge towards 3,000. And certainly the option players seem to be switching and buying some upside in Ethereum as the positioning seems to have dissipated. That's something that we've been flagging. All that call overwriting was making dealers extremely long on Ethereum, but we've seen that positioning collapse. Here you can see a big spike that we had into expiry, and we've seen a big drop in dealer positioning back down to neutral. You can see here what it's made up of. There are a load of longs in March, but there's these big shorts in February here around the kind of 2,600 and 2,700 area. That is what is driving this positioning drop off in terms of dealers, and that should make Ethereum a lot freer to move. And we have already seen a nice big move in that yesterday, 4+%. And if there's nothing holding it back, then this technical break, if we take 2,700 out, then a move towards 3,000 becomes a lot more likely. All right, jumping in to what we're seeing in the term structure, you can see here we've got a big shift in the curve as those Vega buyers in out to June and April come in. That's taken the curve up significantly, right? So seeing big shifts in the curve, order of magnitude of 10 vol points. And so it's not just the front end. Normally when you get a big move, you get the front end spiking massively, back end not doing as much. But here, because we're seeing that Vega buying, and that amounted to about 400K of Vega buying in that longer dated stuff on Bitcoin, and that's really helping shift that term structure higher and creating a very big bid to volatility. All right, so that's what we're seeing in term structure. Similar sort of stories in Ethereum, moving a bit more in the front end Ethereum, so even more uplift in the front. Looking at skew, a big switch back towards call skew. You see this big drop here. So calls trading at around a 5 to 6 volt premium in the front end of the curve. Shouldn't be a big surprise there. A big rush for upside is going to drive that call buying and drive that call skew. And then lastly, looking at relative value, as we mentioned, the Ethereum vol really did pick up over the last day or so. So we have seen a jump from sort of 0 back to around 5 or 6 vols for Ethereum premium. That's in the weekly stuff. As we go out a bit further to sort of 1-2 month, that premium does dissipate. And as we go to the back end, it's pretty close to 0. So right now, we are seeing a little bit of optimism for super short term on Ethereum, as we think Bitcoin may have stalled at 50K and people still think Ethereum's got a leg towards 3,000 in it. And so they'd rather own that short term optionality for a gamma move in Ethereum now that positioning has cleansed somewhat. In terms of the long end, though, because we did see a load of Vega buying in Bitcoin, that has kind of helped support Bitcoin, and that also keeps this spread here in the long end slightly compressed at around 0. All right, that's it for your update on what's been going on in option flows and volatility this week.
So there you have it, right? We are seeing a load of premium being spent on upside. What do you reckon?
Well, yeah, I mean, we've I guess we've always liked that the trade of, you know, you want to be kind of short at the front end and sort of buying further out. I think one of the things I think we have to talk about is the ETH gamma positioning disappearing, and the importance of that. And it might be worth you sort of talking around, you know,
what gamma is,
and why that would have kept us contained in the range,
sure.
And why now with that gamma positioning cleaner, we're now kind of free, if you like, for ETH to break out.
Sure. Yeah, because we want to try and make this podcast a bit more educational as well, right? Obviously, we've been in the game for 20 plus years. We want you guys to understand the concepts we're actually discussing. So what is gamma? Why does it matter? So in TradFi markets, gamma is a massive deal, right? You have probably, like, off the top of my head, 5 or 10 different companies that analyze what gamma positioning is across single stocks and indices in equities. Now, we also do that in crypto, and we have Amber Data's data analyzing that, and we think they probably got the most accurate metrics of that out there. But why do we care so much? So when dealers, option dealers, when they have a lot of gamma on their books, what that means is they are long options, right? It means they've sold options to clients. Sorry, that would mean they're short. The clients are selling options and the dealers are buying them. Now, if the dealers buy options, they're not buying them because they necessarily want to buy them. They're buying them because they are providing liquidity. And the way they make money or don't lose money from those options is by delta hedging those options every single day. Because the thing about buying options is you have to experience what we call time decay. And options lose value just through the passage of time. So the only way you can prevent your book losing money if you're long options is by trading the underlying asset. Whenever it goes up, you sell a bit. Whenever it goes down, you buy a bit. And that selling and buying is capturing money, and that money is compensating you for the time decay that you pay. So that is why if dealers are really, really long gamma, we know that that is what their activity is going to be. They're going to be frantically buying and selling the asset. And that act of buying and selling the asset is going to make it very hard for the market to move materially in either direction, right? If the positioning stays the way it is, and if that delta hedging impact is large relative to the daily volumes in the underlying asset. So now, when we saw the break of 2,500 on Ethereum, a lot of those call sellers that had provided the dealers with a load of long gamma, they switched gear and they bought those call options back. So you saw a lot of on-screen buying of calls. You saw some big blocks covering shorts as well, or maybe even getting long. And suddenly dealers' books didn't have all that long gamma anymore. And if they didn't have that long gamma, that meant that as the market went up, they didn't need to sell Ethereum anymore. So that took some supply away so that Ethereum could start to catch up and smash up towards 2,700 like it is now. Is that a good enough explanation for you?
Yeah, sounds good. No, it's someone who's been called in for some ETH outperformance has been frustrated, I guess, and partly I think from that, from the sort of gamma selling, if you like, which has left the dealers long and having to kind of through their hedging keep us range bound. It now feels like we are perhaps freer to make that rally to the upside. So and then we've had was it yesterday? I think Franklin Templeton filing for a spot ETF. So that news story is like still lurking around, and we can start to price that. The other thing that interests me, so obviously lots of call buying again, kind of reflexive to the move that we had.
And just let me interrupt you, right?
Yeah.
We talked previously, why is trading crypto options a thing and why I love doing it? This week shows you, right? If you had bought any of those short-dated call options in Bitcoin, we got a near 20% move in the underlying, but you probably 10x'd on your premium, right? If you had owned like the 48,000 calls expiring at the end of the month, those things are pretty much multiplied by 10. So you've had altcoin type returns in a week by trading options on the big coins.
Yeah, and I love the way you phrase that with like the altcoin type returns. And when you talk about, I always advocate, particularly in crypto, don't take leverage, right? It's say 60, 70, 80 vol asset class. You don't need leverage in terms of like purely to kind of spot moves, because you just get wiped out. But the leverage you can take in options is you go on Deribit and trade some options, and you kind of can cap what that downside might look like whilst giving you this leverage and these, as you phrase it, altcoin like returns. So we've seen some really decent call buying. That's kind of reflexive to the spot moves. Makes sense. Now, given that call skew, how do you want to trade around that? How do you want to use that call skew to your advantage, maybe, to sort of trade around that? So call skew being the price of calls relative to the price of puts trading at a premium.
Yeah, sure.
What's your thoughts around that?
Yeah, exactly. So the call skews come back because the skew in crypto is very spot sensitive, right? It just moves whatever spot. If spot does something real, like it's just done, the skew kind of chases that basically, right? Because people love using out of the money options to chase the moves. So we've seen a resurgence of call skew across the entire curve. So generally, like if I'm bullish and there's a lot of call skew in the curve, then the type of trades I'm doing are call spread, call ratio type trades. So for example, one of the trades I've got on is like a June call ratio, where I'm long some closer to the money June calls, and I'm short 1.5 times the notional or the number of contracts of a far out of the money June call. And that way I'm taking advantage of that expensive upside vol to bring the premium of my structure down, but I'm still getting really good risk reward in terms of if we do go up, the amount of money I can make from that structure is really quite attractive, right? So that's one way to take advantage of call skew in a bullish way. If you're looking for hedges against your crypto holdings because you've been long since 20, 25K and it's doubled, and you haven't put any hedges on yet, then taking advantage of call skew is another great one by selling calls and using that premium to fund some protection, either through outright puts or through put spreads. So I think when vols are quite elevated, like they tend to be in crypto, I think put spread collars are a good trade, and that's when you buy a put spread. So for example, we're trading at 50K. You might buy the 45K put. You might sell the 35K put against it. So that gives you 10K of protection. And then you would sell something like the 60K calls to get the premium down, or maybe even get the premium to zero. If there's enough of a call skew, you can sometimes put those structures on and actually spend no premium and be really nicely protected. So as long as you've made peace with the fact that if we go through 60K, you're going to sacrifice your Bitcoin holding and you're going to be looking to buy it back on dips, then if you're okay with selling that upside, then that structure can really work well as a hedge.
Yeah, which is why I always say to people, certainly if you had like a level where you were going to sell out spot in a way, you know, you can use these for like yield enhancement as well as sort of hedging yourself on the downside. So
yeah, I mean, the problem with selling calls though in crypto is just that you will kick yourself if we suddenly find ourselves at 80,000 in the next month and you sold them out at 60. So you got to be careful of that, which is why, I mean, I'm of the belief that if you're in crypto, you're probably in it because you're a long-term believer, and the long-term believers think it's going to go into the hundreds of thousands, right, at some point, okay? Because they understand the supply-demand dynamic, they understand the fiat currency debasement story, all these things long-term, I just want to own it, right? But that doesn't mean you can't trade the fluctuations and you trade the swings. And, you know, certainly in the last week, the rally that we've had makes us very overbought in the short term. And that's why putting on some hedges makes sense. But you just don't want to give away the farm. You don't want to give away all your exposure. So you should size it in a way where, yes, you'll give up some of your exposure if it just keeps going in a straight line, but you won't give up everything, because ultimately you want to be long this stuff for the long term, most likely, right? So that's just something I would caveat and make viewers aware of.
Interesting.
Yeah.
So where are we left?
So I did not expect a 20% rally in a week, right? So I was putting on some call ladders on Bitcoin, thinking that was a nice little top-up trade. If it kind of goes between 45 and 47K, I'd make some money. It just blew through all of those. So I ended up stopping out of some of that and just sort of mitigating my risk. But, you know, I'm still a bull. I do think Ethereum is showing signs that it wants a little catch-up here. And I do think 50K is a big psychological level on Bitcoin. I mean, the ETF inflows, if they just keep coming, then it's just going to blast through the level. But apparently there's quite a lot of on-chain data that has shown that people have accumulated Bitcoin at these sort of averages, and they might have been sitting on that for a very long time. So does that mean they're going to breathe a sigh of relief and say, okay, I'm going to let some of this stuff go, or are they just going to keep sitting on it? I don't know. But some people are basically suggesting maybe some resistance comes in at around 50K. So I think Bitcoin probably stalls a little bit. I think ETH could easily be up at 3,000 and Bitcoin's kind of here or hereabouts. So I think that is probably the next trade in the next week or two to play. And we are starting to see that flow in Ethereum come through, as we mentioned in the video.
Yeah, interesting. Yeah, I mean, certainly you'd expect this 50K to be a bit of, you know, some, what I like to say, wood to chop, you know, to kind of really get through that level. I mean, my one element of caution around that is I still think the market is underpositioned. So we're seeing performance chasing, which probably means, you know, we see really good demand on any pullback. You know, will it be sufficient to blast us through it and take us to new highs? I mean, the interesting thing now is that if you start to make way through 50K, then everyone's going to be talking about new record highs, which I know is some way off. Well, 69K.
It's about 2 weeks off at this rate.
Yeah, but that's the exciting thing. My one note of caution that I'd kind of want to sort of leave everyone with is I am getting a little bit concerned on the macro side of things. Just this resilience of the US data, this stickiness of inflation. I keep expecting that to really fall away, and it isn't. If and I don't envision this just yet, but it's worth considering, if we do start talking about like additional rate hikes then I think things could change quite quickly, and I'll keep you updated on what I'm thinking around that. For now, we're still on this. We're looking at rate cuts. We're looking at an easier rate environment, easier liquidity environment, which is going to be throughout the year a positive tailwind. But there's a few reasons for caution, I guess, from the pure macro. However, right now we're riding this demand-supply dynamic, which is going to be a really hard dynamic to fight if you're bearish Bitcoin and the crypto space. So
yeah, and speaking of the crypto space as a whole, I mean, we've discussed the actual digital assets themselves, but for those of you who do trade crypto stocks, my God, what a week. Riot's up 50%, Mara's up 60%, MicroStrategy's up 45%. Coinbase is the underperformer and it's up 25% in a week, and it's underperforming the other names. So this space has come on fire. I called that one wrong as well, so I hope you're not following my trade ideas, because those stocks, which I thought had all these outflows because people went into the ETFs and they were going to struggle to have quite as much beta to Bitcoin, they have proved me well and truly wrong, right? These stocks, Mara's just a leveraged long on Bitcoin. They're sitting on loads of it. They've got loads of debt. That's basically why they're doing what they're doing. But I think with the halving coming up, you don't want to get in the way of this space. Yes, you can take some chips off the table as we go up slowly, maybe add some hedges on, but you do not want to be short this space for the next month or two, I think.
Agreed.
All right, I think we're both unanimously agreed. That is it for this week's Crypto Options Unplugged. We'll see you all next week.